Hey, thanks very much. Welcome back. It's 5 minutes past the hour. It's my pleasure to welcome back Chuck Malamut, our official financial advisor, to the Hurley in the Morning program. As this year we began our 26th year together doing this program, and he has been doing what he does in the financial realm for many more years than that. This is Chuck's program, all about your financial matters. Chuck Malamut is the official financial advisor to the Hurley in the Morning program. Chuck leads his group, the Malamut Group, at Morgan Stanley's Northfield office. His team can be reached at 609-383-2010, 609-383-2010. And the following program is presented by Chuck Malamut, a financial advisor at Morgan Stanley. The information, views, and opinions expressed on this broadcast are those of Chuck, do not necessarily reflect those of Morgan Stanley or its affiliates. They are current as of the date of this broadcast, subject to change without notice. Neither the information provided nor any opinion expressed herein constitutes a solicitation for the purchase or sale of any security. The presentation is for informational purposes only. Morgan Stanley Smith Barney, member SIPC. And now with our market update, Chuck Malamut. Good morning, Chuck.
Good morning, Harry.
How you doing?
I'm great. How are you?
Good. Great to see you. Always a pleasure to be here with you in studio. Market update is yours. Take it away.
Well, Harry, I'm very surprised that you did not ask or make a statement. You must be very, very sidetracked here, doing multiple things because the Dow.
I'm always multitasking. You know that.
The Dow got through a big number the other day.
Yes,
actually 18,000, and first time we've seen that I think since July 2015, if my memory serves me correctly. It's a true testament to what can happen and how a long-term investor is rewarded versus short-term traders that react to the next news event. And think about, roll the clock back to February the 11th, and the world was collapsing, around us, and clients, a lot of clients were obviously very, very concerned about it. And as a result, staying patient does in fact have its rewards. So,
what's the psychology behind somebody that wants to jump at exactly the wrong moment? What's the psychology behind them not making a mistake like that? Because if you cut and run, you've guaranteed your losses.
I think, Harry, the psychology is I can't deal with looking at red all day long on the screen, and ultimately, get me out now, so to speak. And by getting me out, I'm in fact securing, my assets. And if you go back to, you think about where we were in 2008 and 2009. Every day when you walked in, the market did in fact make new lows almost on a daily basis. So, we oftentimes have short memories, but what has happened in the equity markets, we've lost a lot of what we'll describe as the individual retail investors. They went to the sidelines. They stayed on the sidelines and they never came back. So unfortunately, for those that did that, they missed a very, very big run, as we know. And so now we're at the point in time, earnings are coming. The average, the average earnings that we're seeing is beating the street by roughly, on average, 5%. There are some issues. Last night, I believe Netflix missed. This morning, IBM or yesterday missed again, which was not
But a number
unexpected.
Actually hit, though, in the last week
I
or
mean,
so.
J.P. Morgan, if you think about last week, Harry, the bank stocks were basically on fire. They were up about 7% for the week. It was one of the best performances that was put in in that sector in many, many years.
To an extent, Chuck, and present company excluded, because you've been very on top of this on a week-by-week basis when we do the program. So you've been very intellectually honest about it all. But hasn't the media sort of underwhelmed the country with not even really reporting that there's a rally happening? It almost seems like they're trying to make it seem like it's still bad news.
I think, Harry, the media is focused on November. And, they want all eyeballs to be captured on who they want to have as the next president.
And everything will be through that prism.
Yeah, so I don't think barring anything significant in the market. I mean, if we go through these ebbs and flows, and if you think about where we are going into yesterday, the S&P was up about 2.5% year to date. So that doesn't seem like a lot, but we have been through 3.5 months. That's actually really. That's quite remarkable.
I agree.
Depending,
well, especially how it started out.
Yeah, if you go back to those first 6 weeks in January into February, and the fact that the markets were off over 10%, there's a lot to be said. We've staged a rather remarkable recovery with, like you said, with not a lot of attention. And actually, Harry, that's pretty good. That's a good sign for the markets because, once the media grabs hold of a story.
They're hype.
And oftentimes, I mean, this is what you do for a living, so you can tell better than anyone. They oftentimes, create these twists and turns, which aren't necessarily the truth.
It's true. It's so well put. That's exactly what they do. They get on a storyline. They play out that storyline. They create a new storyline. Whatever possible, they'll even let them intersect a little bit. And then it's almost like if you look at anything, the Trump campaign. There was a lot of adulation. Then they were on a crush Trump campaign. So it is true. The media definitely staying out has probably been a good thing because the markets have been able to just, take care of business on their own terms without any hype.
And Harry, the fact of the matter is, if when you look back to the first quarter, it's absolutely amazing that the best performing, sections of the market happen to be one, emerging markets, which are very aggressive, and two, high yield. And on the flip side, the worst performing sectors of the S&P 500 happen to be healthcare and financials, and the best performing happen to be telecom and utilities. So, oftentimes investors they'd be scratching their heads saying this doesn't make any sense at all, especially where we were back in the beginning of February. But you think about, have you heard anything to speak of regarding China?
No, and there should be a lot.
So what has happened? China's come off the front page, so to
Yep.
speak. The anxiety with respect to what was happening in China and how it would in fact impact global markets really hasn't materialized a whole lot.
And that storyline was just voluminous in the media for quite a while. China. Now,
and the number two story, as you think about when oil was trading around 25, and now it's pushing right around 40. A lot of the pundits were saying absolutely we're going to $15 a barrel. This is going to create a recession, and ultimately, what happened? You've had a few bankruptcies. Mm-hmm. There's some discussion of a few more happening in the next few days, or several weeks, I should say. But ultimately, oil rebounded back. A lot of the energy stocks have done relatively well. There have been a few larger companies that have had to cut or reduce or eliminate their dividends for a matter of survival. But while that hurts the common or the stockholder per se, common stockholder, it does in fact bolster usually the credit ratings of a particular company because the company wants to make absolutely certain that the cash flow is there to pay, the debt holders. And without the debt holders, you don't have a company.
About 3 minutes before our first break, Chuck, what's the state of the U.S. economy in your estimation?
Harry, well, this is always our favorite. Well, I think one of our favorite subjects. I think your favorite subject is unemployment. This is probably your number 2, if not number 3. So we are of the opinion that we are working through a fairly weak first quarter. GDP will likely advance by less than 1% for the quarter.
Terrible.
We've had a deteriorating trade balance, declining inventories, falling in automobile sales. You think about the number of SUVs that were sold as these oil prices were lower. So that all kind of points to an economy that we think is going to grow at best. We'll use the word modestly. Indicators, looking ahead, the indicators that we see from the latest beige book that the Federal Reserve prints has in fact showed a pickup in wages, consumer spending, and hiring. So that suggests that growth should accelerate in the upcoming quarters.
When we come back from break, Chuck is going to talk about U.S. manufacturing, consumer spending, which he teased, corporate earnings, and more. We're at 16 minutes past the hour, and it is early in the morning, our weekly visit with Chuck Malamut. Chuck Malamut, for all of your financial planning needs, turn to Chuck and his team. Chuck is the managing director of his group, the Malamut Group at Morgan Stanley's Northfield office. 609-383-2010 is the phone number, 609-383-2010. We'll be back in just a few minutes. Stay with us. Dr. Newkirk lurking around the corner at the top of the next hour for 30 minutes, and then wide open forum. I'm giving Chuck Hulk poses, but he's not reacting to me. I'm going like, "Argh." Chuck Malamut continues. So, Chuck, U.S. manufacturing.
Harry, I've known you way too long, so
yeah, you're not impressed.
If you don't know my reaction,
you're
by
not,
now, you're not.
I did it like 5 times in a row. I was giving him like a Hulk pose. It did not sway him at all. Chuck, U.S. manufacturing. How are we?
So, Harry, if we take a look at U.S. manufacturing, the data that we're getting is mixed, but also we believe is going to improve somewhat. If you look back at the previous weeks, we had some pretty positive results. But March industrial production numbers that we just recently saw ended worse than were anticipated. So it appears, and the reason for that, you've had a stronger dollar up until the last several weeks, anemic global trade. They both are sort of the headwinds that we're being faced with. But we think, and those drags are fading somewhat. So if you take a look at the U.S. dollar in particular, what is happening is, it has sold off of late. And that should help, the multinationals, so to speak, with respect to, protect, with earnings.
What else is happening?
So let's talk a little bit about the consumer. The consumer is, part of that three-legged stool that we oftentimes chat about, with respect to the economy, and we think that consumer spending is going to accelerate, and that
this will be because the consumers are more confident.
Well, it's a couple things. First, March retail sales figures were somewhat disappointing. The growth of the job market, and I know that it's not time to report the monthly unemployment number, but
it'll be fantastic when they do. Don't worry.
But it'll be around that.
Zero.
It'll be it'll be around that 5%. But the strong job market that we are seeing, and the fact that wages are increasing, suggests that consumers should increase their spending levels, and ultimately there should be an uptrend there. But what is happening, if you look at the March numbers that we've seen, and consistent with the other economic reports, the consumer is very, very leery to a certain degree. While things are getting better, they're always worried about, are they going to remain employed? Are they going to remain employed at the levels of income that they're currently receiving? And when you have a company that doesn't make their earnings, oftentimes what do they do? You've chatted about this, that the top line numbers aren't oftentimes met. The bottom line numbers are, in fact, we get there, and you are.
I'm giving Chuck the scissors. I'm giving him my scissors.
Oh, I thought we had a couple fish.
No, that was my universal scissors symbol. My two fingers, first finger and middle finger, acting like a scissor. They cut. What they do.
I thought there were two large koi fish going across the screen.
That kind of does look like a little fish, but it's my scissors. That is the correct answer, though. They cut.
Yeah. So the consumer obviously worries about that, and I think we're living it here. 100% of the time. And I don't care where you go and what you're watching. as you're driving. You're seeing it, throughout this particular area, but even in the rest of the country, the average worker is very, very concerned about being able to retain their job and obviously, earn the income that is very, very important to survive.
And if you're worried about whether you're going to have a job or not, certainly you're not going to confidently spend.
Exactly. And that, there was a number of reports that came out not too long ago, Harry, that suggested or stated that the consumer, the savings levels were significantly higher than we have seen in years. Now, that's good news and bad news. It's good news for that consumer that is going to look to retire because, the average retiree, Harry, today, about 25% of their income they derive is from Social Security. The other 75% is dependent upon, we'll call it 401k, pension, and as you see, a lot of part-time work. So you kind of think about this. This is what the consumer thinks about, and not kiddingly, but there are a lot of people that are working that I'm sure would prefer not to be working.
There are a lot of people that feel like they will never be able to retire.
Yeah, and I know we're not going to talk about politics, and you spent a fair amount of time with it, earlier this morning, but I find it rather ironic that the male candidate on the Democratic side had a real problem explaining his tax return, his 2014 tax return, and I think he was in the top 1% of wage earners, but is beating the drum for free school, free everything. I don't want to say I was chuckling, but I was obviously very, very disappointed in his tactics. We'll leave it at that. How's that sound?
That's very skillfully stated in a way that's not political, and yet you made your point. This is also not political. It's sheer numbers. On the day after Income Tax Day, and I still don't know why the 15th was a Friday.
We
I
had
still don't know why.
Emancipation Day in Washington.
Okay,
and then if you happen to live in Massachusetts, they had their holiday yesterday. It escapes me what their holiday was, but if you remember, that's the day they run, I think, the Boston Marathon.
Yes, that's true.
And
so that's why it was 18th.
The 18th nationally because of Emancipation Day in Washington D.C. But
got it.
Yesterday, if you live in Massachusetts, you can file your state return today.
Here's a stunning number: 45.3% of all U.S. households do not pay income tax. So that to me is a stunner and a big reason why we're a 50-50 nation of takers versus makers. Puts a lot of pressure on the top 1% and the top 20%. This, I think, based on a lot of the media that are intentionally intellectually dishonest about things. And again, this is not politics, it's sheer numbers. The 20% of Americans, we'll put them at the top 20% of Americans pay 87% of all income taxes collected. The top 1%, and that's why you made me think of it when you were talking about the top 1 and the top 20%. The top 1% pays almost half of all federal income tax. So in fairness to any dialogue that either side will ever bring up about people need to pay their fair share, it's a pretty interesting comment when you look at the numbers in a dispassionate way.
I think it's really unfair, Harry, to that top 1%. Look,
and the top 20%.
If you earn, if you put yourself out there and your family out there every day and took on a lot of risk, to be rewarded or penalized, who gives the politician and who gives the media the right to chastise these people?
Or that you're not paying your fair share when I guess you could say you're right, paying a disproportionate share.
The person that we talked about, the male Democrat candidate, his effective tax rate, if I heard it correctly, was 13%.
How about that? And the sitting president of the United States paid 17%.
So go figure, and
what a conversation that should be.
For the average W-2 employee that is earning, a significant income, they are not in the 13 or 17% bracket.
Remember how Warren Buffett took a real beating in the media where they said his secretary pays a higher rate than he pays? Well, look at these two examples. Mm-hmm. So very, very, very non-political, but very fair. And the point that I try to make on this program all the time, Chuck, for the past 25 years is whenever I hear this thing that the rich need to pay their fair share, well, they already pay a disproportionate, unfair share.
Harry, I do agree with you. And
get no credit for it.
I think my rub in this is I have a problem with anybody, whether it's a political candidate or someone in our respective businesses, and that talks out of both sides of their mouth. I have a real problem with that.
Chuck, we're going to take a brief time out. Great Mondays are taking place at Harbor Pines Golf Club, the exclusive golf club to the Hurley in the Morning program, 60 and above. And really all you'll have to do is present an ID, which you have, your driver's license or county ID, whatever ID you want to present. 60 years older and above. What a wonderful opportunity to play at a reduced rate at Harbor Pines Golf Club Mondays. And I call them seasoned citizens, not senior citizens. Some really great pricing for you at Harbor Pines Golf Club, 500 St. Andrews Drive in Egg Harbor Township, 609-927-0006 to reserve. And always keep in mind a great array of memberships that are available. Wonderful for golf outings, such as, and I never ask you to do what I haven't already done, we have selected the Harbor Pines Golf Club as the official home of the upcoming 9th annual Hurley in the Morning Golf Open. Chuck Malamut, thank you for all the golf balls. Chuck is nodding in affirmative, and we appreciate you for that, Chuck, and much more that you do every year. So if you're having a golf outing, Debbie Stevenson, who is the only certified golf planner in all of southern New Jersey, will be working side by side with you in your event. Weddings, banquets, they have a wonderful practice facility, the Golf Academy, outstanding grill room, wonderful pro shop, which is appointed, and all the procurement there done by Mrs. Gerwicks herself. The Harbor Pines Golf Club, owned by the legendary Gerwicks family. Tell them that I sent you Hurley in the Morning. Back with Chuck. Chuck Malamut, Your Financial Matters continues in just a few minutes.
Hi, it's Glenn Beck, and I'm coming up at 10 this morning. Now back to Harry Hurley on WPG Talk Radio 1450.
Hey, thanks very much. You are listening to Chuck Malamut. Chuck Malamut is the managing director of his group, the Malamut Group, at Morgan Stanley's Northfield office here in wonderful Atlantic County. 609-383-2010, 609-383-2010 for all of your financial planning needs. Chuck, in terms of, I think we did a really good job covering, you did, the market, the economy, manufacturing, consumer spending. Did you cover everything in terms of corporate earnings that you wanted to?
Let's chat a little bit about corporate earnings, Harry, because they are coming fast and furious, and the average earnings that we're seeing is beating the estimate by about 5%. Now, there have been, obviously, some companies along the way that have missed, some rather dramatically, but for the most part, it has been a decent quarter. But remember that the earnings that we're comparing to have been moved down significantly, and it's been now the better part of a year since we've seen improved earnings. But
now, when you say earnings, are you talking
bottom
line? Bottom line. You're talking bottom line, because that to me makes the most sense.
So if you look at the S&P, the S&P 500, the earnings have been flat to negative for the past 5 quarters, and this I think explains why equity prices have, while we've had a lot of volatility, they've remained rather static over that time period. We think that if the consumer does what we think they're going to do and manufacturing does in fact continue and pick up, the economic acceleration should help earnings recover in the second half of 2016. That being the case, it should be a positive note for stocks as we get into the second half of this particular year.
I don't know that you have an answer for this, but I'm going to bring it up anyhow. I was curious to see Saudi Arabia's threat that if we release the 28 pages from the 9/11 report, that they will do something to injure our financial markets. I mean, there are like hollow threats that you don't take seriously. Saudi Arabia has enough American investment that if they did what they said they're going to do, sell treasuries and sell this and sell that, they can destabilize us, can't they?
Harry, I think maybe on a very, very short-term basis.
So it's no big deal?
I don't say it's not a big deal, but if you look at the recovery that we saw in the markets yesterday as a result of the fairly tough opening and the sell-off that we had overseas because they couldn't get together, with respect to where we were going to go with oil, the market reacted, I think, very, very well as a result of that. So I don't want to call it an idle threat, but I think one of the things that has crippled the market to a certain extent has been the ongoing geopolitical risks that we have within the market. Now, the market's done a very good job, sort of keeping at bay, all the terrorist activities that we have seen over the last year. That doesn't mean that we should forget about them in their entirety, but I think the market is a lot more mature now than it was, say, a decade ago. But ISIS is a force that we need to reckon with, and hopefully sooner than later.
We have been doing this program for so long now that we actually now have experienced 4 administrations, and 3 of them 2-term administrations. So it's quite a history now. And you've talked a lot over the years about geopolitical threats, and that's why that issue of the Saudi Arabia came to mind, because that was one of the more sort of brazen, in your face, you better not release those documents or else. I mean, that was, you don't often, usually in more diplomatic terms, things are couched a little more professionally. That was pretty in your face. And obviously there is something in these 28 pages that they do not want to get out.
I think it's very, 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 very obvious for sure.
Yeah, not a bold prediction there at all. Chuck, about 4 minutes or so left in your program. Generally speaking, what else?
So Harry, let's so we chatted about earnings to a certain degree, and the risk in the market and the risk to earnings could in fact be the rising labor costs. I mean, we've seen throughout various parts of the country, the $15 minimum wage, that could obviously have an impact. So slow wage growth has been a plus for corporate earnings to date over the past year. But as we mentioned earlier, wages are now in fact increasing, which presents some negatives. The growth in the average hourly earnings is approaching its fastest pace that we've seen in 5 years, Harry. And declining unemployment levels, should continue putting upward pressure on wages. So while that's a positive for consumer spending, it does complicate a little bit what is happening with corporate earnings. So, it's a double-edged sword. So you got to be very, very careful with that.
You know what I thought was stunning, and we talked about it recently when it all was coming about. The governor of California, Governor Brown, before he signed the new $15 an hour minimum wage, and again, this is not politics, it's a financial point that we're making, he made the statement that he didn't believe this was making economic sense, but then he took the pen and put it in his hand and he signed it.
Right.
I never heard anybody do that before, which means we're now making financial decisions which can be catastrophic for ideological reasons. I mean, it's always been that way, sort of, but, I mean, to say it was stunning to me, and we've already seen – I heard a news announcer yesterday, because there's companies that have already announced hundreds of employees are being laid off because they literally can't afford the $15 an hour. And in fairness, these are jobs where a lower wage because they're typically, a younger person that's working this job while they're, getting ready to either finish school or to start their permanent career. And so these wages, when they get into this whole dialogue about we need a living wage and all these different things, it's really, I think, deceptive how it all comes out. But for the governor to know that it's economically disadvantageous and then go and put his signature on it, to me, that was a stunning event.
Well, Harry, you know the reason why.
Of course. But the media that calls it the law of unintended consequences, it's not the law of unintended consequences. It's the law of intended consequences. If you jack up a rate to a point where an employer can literally not afford to pay it and keep the same number of employees, the only end result there will be a reduction in workforce. It's very, very unnecessary.
Absolutely. So I guess, Harry, to kind of conclude, think about this. We've been through 2 double-digit declines in the equity markets and subsequent rebounds, since last summer. So, the market goes into cardiac arrest and then has recovered. So, in both cases, the sell-offs that we had seen was due to the concern over the global economic growth, particularly China, and then here in the U.S. So, over the last few months, conditions seem to have stabilized. Risk assets, as I mentioned before, high yield, emerging markets, they've held up very, very, very well. So some signs of economic and policy clarity from China have also helped, and the renewed commitments towards pro-growth policies within the global central bank. So we are, net positive with equities, but I still think that we need to be a little bit cautious as we, get through this quarter into next quarter, and then I think all eyes then are turned to November.
Chuck, the second 2 months of the first quarter, I think it's going to go down. I've heard you use this phrase, I think, on your show over the years, sort of the Rodney Dangerfield gets no respect. This was an amazing recovery in the face of all the things that were going on, including the horrific first month, to really get back and to get back in the black. I think this is really an underappreciated recovery.
Well, what is, Harry, and a lot of our clients were very, very pleased with their end of March statements, because a lot of that recovery took place during the month of March.
Because nobody expected it.
And
all at once.
We have had relatively positive results thus far the first 2 weeks into April. So if we continue on that trend, we can actually have another positive month, which I think that doesn't help investor confidence to a certain degree. But, think about it. The S&P up 2.5% year to date. The Dow Jones up 3.5% year to date. Emerging markets up 7% year to date. The Barclays Ag, which is the bond indices up 3%. So,
Chuck, isn't it true? I mean, it's always different because unless you have something that sort of resembles another era. If you have a month like we had to start the new year, it can sometimes take half the year or never, and you don't even make up for it.
Harry, the pundits in January, as we got to the third week of January, and the awful results that we were putting in at that point in time, basically said the market is dead. 2016 is going to be an awful year, so you better pack up your bags and head out of town. Well, the good news is they were proven wrong again.
Yeah, they crushed what they thought was the bad news, and then they've been a whimper, barely a mention in terms of how things have turned around. I know that's pretty typical, but it's still regrettable. Good stuff, Chuck.
Harry, thanks for having me. Enjoy the rest of the week. We'll see you again soon.
Look forward to it. We will see you next time. Chuck Malamut, for all of your financial planning needs. Turn to Chuck and his team, the Malamut Group, at Morgan Stanley's Northfield office, 609-383-2010. Phone lines are open right now, a mini open forum segment. Just chatted with Dr. Newkirk. He's ready to go in about 15 minutes. You can jump in now until the top of the hour at 609-407-1450 about anything that you want to talk about in Wide Open Forum. The program that you just heard, presented by Chuck Malamut, who is a financial advisor at Morgan Stanley. The information, views, and opinions expressed on this broadcast are those of Chuck, do not necessarily reflect those of Morgan Stanley or its affiliates. They are current as of the date of today's broadcast, subject to change without notice. Neither the information provided nor any opinion expressed herein constitutes a solicitation for the purchase or sale of any security. This presentation is for informational purposes only. Morgan Stanley, Smith Barney, member SIPC. We are back with your phone calls, you leading off next in just 2.5 minutes when we return with more Hurley in the Morning on WPG. Talk Radio 1450, tell a friend. We are South Jersey's talk station.